Hey guys, welcome back to another video. Today we'll be taking a look at Chewy. So as always, starting off, we're going to look at their PE ratio, which is currently at a 2,256, which is terrifying to see. You want this to be at a 20 or less. So this is something important to look at because it shows you how risky the investment will potentially be. I also want to see if they currently offer any dividends, which they don't. This is perfectly fine as they probably would rather reinvest the money back into the company. Before we look at the income statement, I want to see what their gross margin and return on invested capital is. Right now, the gross margin's at about 24%, which is good as you want this to be above 20%. Then with the return on invested capital, it's currently at a negative 150%, which is terrible because you typically want to see this be above 7%. Getting into the income statement now, we're going to start off with the revenue. So, as in the most recent year, they're bringing in 7.15 billion, which is up 6 billion from 5 years ago. So, this is great to see. Now, checking out their net income. So, the net income growth looks pretty bad. So, they haven't been making any improvements on this, which I don't like to see, and they're not much better than what they were in 2017. And finally, the last thing to look at on the income statement is the shares outstanding. So this is something you want to see decrease. The more it goes up, the less your shares are worth. As you can see, it looks bad. They brought it up to 407 million from their 398. Moving into their balance sheet now, we're going to start off by taking a look at their current assets. So their current assets are looking good as they've grown to 1.23 billion, which is an increase of 341% from 5 years ago. Now with their current liabilities on the other hand, as of 2021 they're at 1.38 billion. So this is not great to see as they have almost 150 million more current liabilities than current assets. The last one of the most important aspects to look at in any company is the free cash flow. Cash flow is important because companies have a lot of money on hand, have the advantage of being able to pay off any debt, invest into future growth, or pay dividends. So this is clearly something you need to be improved on year after year. As you can see, it's looking pretty interesting. They've been consistently growing this for the past 3 years, so hopefully they can keep continuing to do this. In conclusion, Chewy has some average financials. Some criticism I have to give is that they need to work on their net income and start buying back shares. They also need to have more current assets than current liabilities before I ever consider buying the stock. When it comes to investing into this company, I personally wouldn't be buying it unless it goes below $20 per share. Two things I want to mention before I end the video is my trading strategy is centered around finding value in a company. If I don't see consistent growth in most or all the categories I cover, then I tend to stay away. Secondly, I also want to point out that I am not a financial advisor. I'm just a guy speaking my opinion on stuff on YouTube, so I highly recommend doing more research before coming to the conclusion of buying or selling any stock that I talk about. If you guys have any companies you want me to take a look at, feel free to comment them down below. Otherwise, thank you guys for watching and have a nice day.